Sunday, May 29th, 2022, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at why patience is so important in the silver market, especially gold as well for that matter. But I think those that have patience and know what precious metals are all about, that they're a signal, a barometer of monetary rectitude, they will greatly benefit from having physical silver and gold as well. And before I start, I'd just like to say that if you're new to the channel and you enjoy my videos, make sure you subscribe, hit the little notification bell to be notified of all my new videos. Yes, and I make a video every day virtually, sometimes even twice a day. Tonight as well, I'm going to be making my Sunday live stream at 9 p.m. London time. So yes, if you haven't been to one of the live streams, make sure that you put that in your diary. So history is always the best way to try to ascertain what's going on in the present and what might happen in the future. Mainly because human nature never changes, and humans keep doing the same thing all over again, making the same mistakes, or sometimes doing the right things, of course. And it doesn't really match exactly events of history with present events, but it gives you a really good idea of what could happen. And patience, I think, tried a lot of people back in the 1970s, especially with silver and gold as well. And we're going to look at gold, but a little bit differently. We hear now a lot of people talking about that gold and silver are failing as a inflation hedge. And of course, they look at inflation as the numbers that are published by the government, the CPI numbers in the US and in the UK. They don't look at inflation as the creation of money and credit. And if they looked at it like that, they will see that the inflation has been happening for decades. It's just that that currency, or money, if you want to call it, has been flowing into the right assets. The central banks have cornered the bond market. I mean, the other day I saw that the New York Fed owns almost 40% of 10 and 30-year notes and bonds, treasuries. I mean, in Japan, it's even worse. The BOJ is the JGB market, or Japanese government bond market, and the same thing for the ECB and the European central banks. So yes, the central banks, they can corner markets and manipulate everything, but when the public does it, like they did in the 70s and early 80s with silver, with the leadership, of course, of the Hunt brothers. And the Hunt brothers, many people don't know, they started stacking silver in the early 70s, right after the closure of the gold window by Nixon. And the Hunt brothers, the Hunt family, they were one of the richest families in the world. They had a lot of oil revenue. They were in the oil business. So they knew that the inflation was going to come. So they started stacking silver. Why not gold? Well, because at the time it was not legal to stack gold for Americans. Only from January 1st, 1975 could they do that. But yes, and a lot of other people got involved with the Hunt brothers, foreign investors as well. And yes, of course, as I said, the central bankers, they can corner markets, but the general public, especially silver being the anti-dollar, of course. And I think it's silver that's going to show that the dollar, the paper dollar, the I owe you nothings, that's what John Extra called the dollar after August 15th, 1971, yeah, that's going to show, this system is over. Where the price will be, it doesn't really matter. You probably won't be able to get any silver. I was listening to a precious metals dealer the other day on YouTube, and he said when the price takes off and it goes above 50 and trades $20-$30 a day, none of the precious metals dealers are going to want to make a price, because they're just going to sit tight and watch it, because they could lose their shirt, and they're going to hold on to their silver because they will know that things are unraveling. So back to patience then. Yes, we're hearing a lot, of course, that, yeah, silver is dead, gold as well. They haven't done well in inflation. But I think we're just in the beginning. We're just in the first year or two of the CPI inflation, right? Because we've had the inflation. It's already baked in the cake. So I've done a little bit of charting, and I love doing looking at the charts and doing a bit of technical analysis on the weekend, because everything's quiet. The markets aren't trading. And I looked at silver, and I used barchart.com. You can do that as well. I look at silver going back to 1970 up until like middle of 1983, I think. And I think this is a weekly chart, if I'm not mistaken. Let's have a look. Yeah, weekly chart. So silver was trading below $2 most of the early 70s. Then after Nixon closed the gold window, it started trading up, and it made an all-time high back in February of 1974 at $6.70, as you can see. And then it took almost 5 years. It was not until 1979 that silver broke that all-time high again of 670. And as you can see, it was languishing probably between like 4 and 5 most of the 70s there, from 1974 to 1979. Yeah, so almost 5 years. So I'm sure, I was around in the 1970s, that period there, 74 to 78. I remember very well what I was doing. I was a teenager, I guess. I just turned 10 in 74. So, but silver was the last thing on my mind. What did I care about in those days? Well, I used to play a bit of tennis, school, and all those things, but never did I think of silver. I knew things weren't great in terms of the economy. We had inflation in Brazil, where I grew up, and you had inflation in Europe and North America as well. And that's why I put that Federal Reserve Bank of Minneapolis Consumer Price Index chart, and I took it from 74 to 1980, so you can see that there was inflation back then, and silver did nothing during those years. So there you go, 74, 11.1%, and then yes, it dropped, but it was still going up at 9.1, 76, 5.7, 70. You had over 5% inflation, or CPI, Consumer Price Index rises, and I would say that nowadays, the inflation or the CPI is a lot worse, because back then I think the BLS was still relatively honest. Nowadays, these numbers are a lot higher, and it's another reason why I think the bull market in silver and gold is going to be like one for the ages. And I've said that before, and I'll say it again, mainly because they've been lying so much about what's going on in terms of consumer price index. You just have to go to shadowstats.com and John Williams to look at that. So I think CPI is the highest it's ever been, higher than in the 70s, because they've tinkered with it. They've used hedonics, which basically says, oh yeah, your car might be worth 50,000 now, but it has improved. It's a lot better than the car from 1990 that was worth 20,000. But have your wages and your salaries gone up as much as the price of the car? No. So it's a really bad, I think, thing to do. It doesn't really indicate the cost of living. The other thing they do is substitution. They substitute fillet steak for spam or whatever, and they don't take into account shrinkflation as well. And they also strip out a lot of things. They call it the core inflation or core CPI. And the Fed, of course, is the worst. They have their PCE, which is highly doctored, and they've also they don't put the house prices, the increase in house prices. They use something called owner equivalent rent. So they do a survey of people who own homes and say, how much would you rent your house for? And if that rent doesn't go up, they say that housing is flat, house prices. So it's a joke. So as you can see here, it was only after the beginning of 1979 that silver started really taking off. We broke the 670 high in 1979, and it was like a rocket ship. It went almost up to 50 by January 1980, and it wasn't finished really, because even though the U.S. Treasury, COMEX, basically stopped people from buying silver futures, they basically rigged the market, right? All you could do was liquidate long positions. You couldn't initiate new positions. They did everything to stop that. And why do they do that? Well, because silver is really the anti-dollar. It's the money of the general public, and they can't let silver be up there. So they had to do something about it. But even after it dropped like to almost $10, towards the middle of 1980, it still went back up to almost 25. So if you'd been buying, in the 70s, if you knew what was coming below $5, you'd still would have done very well. So what I'm trying to say here, usually the big moves come towards the end of a bull market, and they don't take that long. So if you're not in it, you're not going to participate. And that's why I tell people you need to be patient, just keep stacking. Do I think that the current move or the current bull market, do I think it will end like in 1 year like that with a massive spike? It could, but I would say the silver bull market has been going on since 2002 and 3. It's been a much longer bull market than it was in the 70s. In the 70s was about 10 years. So we could see silver taking off over a period of years, maybe 2 years, maybe a little more. Who knows? And I have a feeling that really want to get out this time. And by that, I mean, really want to get out into Federal Reserve notes, because I think what silver and gold are going to reflect is the collapse of those currencies. So, yeah, you might want to barter or exchange your silver for other assets, but I don't even know if you will want to barter for or exchange it for the national currency. We'll have to see. I could be wrong about that, but anyway, I just wanted to show you as well the teacup. This is the teacup. I mean, this is the mother of all teacups. That's what I mean in silver. And it goes back to the early 70s. I call it the I owe you nothing's dollar teacup. Why that? Why not the silver teacup? Well, because I think teacup represents basically the powers that be trying to keep the dollar going, the paper dollar, and silver is the most important metal that represents money and is the anti-dollar. Why are the big banks like J.P. Morgan and Bank of America, why do they keep shorting the paper silver? Well, because they're part of this teacup mechanism, I would say. And interesting that I noticed yesterday when I was looking at this chart that after Nixon announced the closing of the gold window on August 15th, 1971, silver had a really big drop. And I wonder what people were saying then. Oh, silver's finished. It's not really going to help people protect themselves against the inflation that's coming with the closure of the gold window. But I would say that was a bear trap, so to speak, a false breakout on the downside. I mean, this gives you a better idea of what silver really did in that decade. Yes, that looks a little different there, the consolidation from 74 to 79. But it was a massive move. But the teacup, of course, has been forming since 1980, I would say. And the high in 2011 forms the other side of the teacup. I mean, I don't even have to draw the cup, the lines for the cup, because it looks so much like a teacup, right? And there you have the handle. And we've broken out of the handle already, as you can see. We're just consolidating there, frustrating the non-patient silver stackers, or they're probably not even stacking anymore. But I can't tell you when this is going to take off. But when it does, it will be too late. And that's why I think if you can still stack silver, I would be doing it. This is not financial advice, of course. This is just my opinion. And I'm going to stick to my silver in whatever form, be it coins, bars, and even one of these, a paper money clip, right? There you go. That's 925 silver. Anyway, what about gold? Let's look at gold. And the reason I'm going to look at gold, I'm not going to go back in the 70s with gold. I'm going to look at teacups in gold. And the first time I heard about a teacup formation was back around 2004. And when I used to follow a lot jsmindset.com, Jim Sinclair used to post a lot of his charts. He used to draw charts and on the blog, and I learned a lot from Jim Sinclair. And this was the original mega teacup that we had in gold back in those days. And yeah, the gold price teacup of the turn of the century. That's what I called it. But you see, there's a teacup there with a high in 1996 and the level on the top side there, just like the $50 equivalent for silver was around $420, just above 400. And as you can see, it tried to break out of that a couple of times, the teacup. So there was like a double top there in that shaded area that I put there. So just keep that in mind, a double top, and then the market came back down and it looked like it was finished. Gold, that it was gonna fail. It wasn't gonna go above 400. And that was just around the time that the FT wrote that article, April 14th, 2004, about gold being pointless and it being pointless to hold gold. So you can see the FT is part of the establishment. It's part of the bankers' financial press, and they're trying to denigrate gold then, and they failed, of course, and that teacup worked like a charm. I mean, we went almost up to 750 in the next couple of years, or 2.5 years, and eventually in 2008 we went up to 1,000. So that was the first teacup that I saw that worked well. So as I said earlier, I think the teacup represents kind of price management and suppression of precious metals. And in the mid-90s there, that was the period where under the leadership of U.S. Treasury Secretary and also his deputy, Larry Summers. The secretary was Robert Rubin, who was he used to work with Jeff Christian at J. Aaron and Goldman Sachs, the precious metals division. They started the leasing program to bullion banks so that bullion banks could take that leased gold and sell it many times over. And you had also the Gordon Brown bottom there as well. He was trying to suppress the price too for the bullion banks. And eventually they had to let go because some people don't think that gold is important. Well, one thing I would say, if gold wasn't important, why did Nixon close the gold window? He could have just left it open, let all the gold go. So it's still important for the bankers, gold, because they can't let the public buy the gold or the silver. And eventually they'll have to cover these short positions. And that's when the teacup takes off, in my opinion. So now we come to the current teacup. It's another big one. It's been evolving since 2011, and now you see why I put the shaded part there, the double top, in that previous teacup. Well, it looks like we have a double top here too in this teacup. Will it drop as far as it did back in around April 2004? Maybe. So we could go even lower here in this teacup, but it looks like we're starting to bounce now, gold. But we'll have to see. But I think it's a perfect teacup here, and we're forming the handle. Where it's going to go on the upside, like with silver, I don't know. Over the next 2 years, who knows? Or the next 3 or 4 years. And I spoke about the FT, how they're trying to poo-poo gold, say that it was a pointless relic and that people shouldn't hold it. When it was trying to break through 400, and now that we're trying to break back above 2,000 and the all-time highs, we get the former chief of the Bank of Canada, a central banker, go on Kitco and say that gold is useless, that it's an antique, that it costs too much to hold, even though it's returned over 8% per annum for the last 20 years in Canadian dollars. So, I thought that was the equivalent of the FT article there, Mr. Dodge saying, basically saying, what is gold, So there you go. Patience. That's the most important thing. Yeah, many people will not be patient enough, but I have been, and I still believe in the fundamental story behind gold and silver. It's not about getting rich, even though I think people who hold on to it could do very well. It's more because it's going to protect your savings and do even more, I think, especially in this current monetary environment. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. And think about subscribing to my channel. So I wish you all a great long weekend in the US. In the UK, we've got a really long weekend coming up. Anyway, take care. Bye.